Okay, everyone. Thank you for joining today's webinar. My name is Brandon Garner. I am the sales manager here at Superior Trucking Payroll Service. Today's webinar is going to be on per diem, the topic of per diem and the best practices for per diem. Some quick housekeeping notes. So we're going to let the truck go by here. Some quick housekeeping notes. All of your lines have been muted during this webinar. Over here, if you look on the right, is a copy of the webinar box. A couple of things. Please enter all your questions in the question box located here. It can be shrunk or enlarged based on the plus or minus sign. You can slide the GoToWebinar throughout the window by closing it and by clicking the double arrow or the orange arrow. But one thing is, in the upper right-hand corner, don't click the black box or you'll be exited from the webinar. Okay, what do we do here at Superior Trucking Payroll Service? Well, we are a full-service payroll administration. We specialize in trucking. Listed here are things that we do that are all part of our service fee. There are no additional charges for these. Direct deposits, garnishments, tax calculations, even W-2s and 1099s. And then we also have additional services that are driver recruiting applications and HRIS software. Bottom line is we understand trucking. We know it, and all our staff is well versed in trucking. Next, a little bit about our speaker, Mike Ritzema. He was a former CFO for a 75 around truck fleet company and brokerage. He has 20 years of payroll experience. He is the founder of Superior Trucking Payroll Service, and with 10 years of trucking finance experience. And he's a member of many transportation associations. And with that, I'm going to go ahead and hand over the webinar to our founder, Mike Ritzema.
Thank you, Brandon. Today's webinar is going to be about per diem. It's going to be a little bit of background about it, what has changed recently, and how you can best take advantage of it. Specifically, these are the things we're going to cover. What changed with the new tax laws now that we're almost 2 years into them? We can get a better look at it. Why paying per diem can really help your business financially, and the other great ways paying per diem helps your business, specifically driver recruiting and retention. We're going to talk about when you may not want to pay per diem to a driver, and we're going to talk about the best ways to pay per diem because there's more than one way to do it. And then, of course, questions and answers at the end. If at any point you have a question, like Brandon said, just put it in the question box and we'll try and pick it up at the end. If we run out of time, we'll reach out to you. Okay, this is the law, HR 1, as you can read, that's the new tax law, the Trump tax cuts, some people call it. There's different words for everything, depending if you like it or not, I guess. I listed some of the biggest changes in the tax law, but the one that matters to me is the bottom one. The first 4 have probably already been covered when you did your taxes back in April, but the per diem one is the big deal on this. There were a lot of publications that suggested that per diem went away and that you couldn't take per diem anymore. Well, it went away in certain situations, but it didn't go away all the time. What went away was if you were a W-2 company driver and your trucking company did not pay you per diem and you took it as an itemized deduction through a series of forms that I won't bore you with, that went away. Unreimbursed employee expenses went away. But with the new higher standard deduction, it really wouldn't have mattered. Most people wouldn't have been able to take advantage of the per diem deduction anyway. And trucking companies, including owner-operators, it's still deductible for them just like it was. So a trucking company can pay their company drivers that are W-2, they can still do per diem like they always did, and it's still all the same advantages. And when we'll go through those, none of that changed. It only changed for the company drivers who weren't getting paid per diem by their motor carrier. So let's talk a little bit about per diem. I listed the link there if you can't sleep at night and you want to read some government documents about tax. knock yourself out. But basically, trucking companies can pay their drivers they can pay them up to $66 per day as reimbursement for meals and incidentals. The requirements are that the driver has to be in multiple meals and incidental markets, and they have to be gone for a number of days. They can't just drive from Grand Rapids to Lansing. We're in Grand Rapids, Michigan. Can't just drive an hour and come back and call that a day and try and take per diem. But if they're going from Detroit to Los Angeles, and that's a 8-day round trip, then they can have $66 a day paid to them as per diem, which makes it not taxable, makes it all go to the driver's pocket. It's a significant win for the driver, which we're going to cover here. And that's why I say pay as a substitute for wage and be a hero, because how many times does the HR department or the accounting department get to really impact the driver like that in a positive way? First, we're going to talk about the company side of it, because we listed in the first slide, save the company money, save the driver money. So here's an example we're going to run through. 10% work comp rate for your drivers, $10 a hundred is how the insurance people will say it to you. 21% marginal corporate income tax rate, which seems to be the standard. And then we just made up a driver who went 2,500 miles at 42 cents a mile, but was out 5 days. Hopefully it's a typical driver. Everybody's situation is different. We had to pick one. This slide is a little complicated, but I'm going to try and walk through it as best I can. We've got gross wage of, let me see if I can get my pointer option here, my pen. All right, gross wage, that's just the rate times the mile here. 42 cents a mile times 2,500 miles is $1,050. And whether you pay per diem or don't pay per diem, that's going to be the same. So what we suggest you do is for the guys you pay per diem, take it out of their gross pay, which leaves them $720 in taxable wage. And then you'll work from there. And I'll go why this matters in a minute. As you can see, the difference between these two is that $330. Because per diem is only 80% deductible for income tax purposes, you end up paying tax on this $66. But that's just at 21%. So you pay the $13.86 here in tax. But you save on the FICA tax, on the Social Security and Medicare, you're going to save $25. And so you take that, and then you also add that per diem is generally not subject to workers' compensation, which is the really big savings. That's the $33 here. You add all those up, so you paid the $13.86, and you got back the $25.25, and you got back the $33. Your trucking company is going to save $44.39 per driver per week in the example that we have here. Well, that math gets pretty favorable pretty quickly. $44 times, and I just use 25 drivers in the example, you can save $57,700 in real money. This isn't some pie in the sky, you'll save 1/10 of an FTE here kind of nonsense savings. This is insurance savings and tax savings. It's significant. And that's 25 trucks. I don't know how many trucks each of you have, but some of you have more than 25, because I know some of the attendees are people that signed up. The savings is significant. If I can, I'm going to go down. We've got a website here. It's part of our website. It's a tool on there, truckingpayroll.com/per diem savings. Let me see if I can bring that up a minute. Right here, okay. So as you scroll down, you can put your information in, 25 trucks, 0.1 workers' comp rate, and there's that 57,700. Feel free to use this. We make some assumptions on this when we're doing it. If you want a more comprehensive look at it, let us know, reach out to us, and we'll help you figure out exactly what you could save paying per diem if you're not paying it now. But it's a nice little tool to have. Well, let's talk about the driver here a minute. Again, we've got the same 1,050 that we had in the other example. The driver gets $330 of it taken out as per diem when you pay them per diem. So they only pay tax on the 720 here. And then their taxes go down the line. I used a single person in Michigan with 2 exemptions, just as an example, because we got to pick one. And so they get down to all these things, and then their net pay before per diem is $586.34, but then they get that $330 back right here. Forgive my bad drawing. I'm not John Madden on the telestrator. And they get $916.34 in their check versus no per diem. No per diem, they pay more tax for FICA, they pay more tax for federal income tax, they pay more tax to the state, and they get $831.85. The difference between those is $84.49, which if you multiply that by 52, you're going to be in excess of $4,000. It's the biggest raise the driver's ever going to get, and it's significant, and you can really help their lives. One of the next benefits that we like to talk about is because of this driver savings, it can be a powerful tool for recruiting and retention. A driver that knows what per diem is going to be looking for that when you're placing a driver ad. And so if you put in your ad that we pay the maximum per diem that we can, or even just mentioning that you pay per diem at all, if they know what it is, they're probably going to like that and might give you an advantage when you're recruiting. In addition, because your driver has more money in their pocket every week, it's going to help retention by easing their financial stress. It's also a way for you to demonstrate to the driver that you've got their back and you want to help them however you can. The fact that you're saving money is nice too, but you're really saving more for the driver than you're saving for your own trucking company. Another advantage is less advances. If your driver gets an extra $84 a week, hopefully they don't need as many advances. There are companies that basically have half of somebody's job is just keeping track of all the advances because everybody gets all this money and you got to make sure you deduct it for payroll. And there's the advances they get on their fuel card, plus the loan they hit you up for, and all these other things, as we all know. And it's time consuming to have to manage this, as well as the potential of not remembering to deduct an advance back and costing the trucking company money. If we can do less of this, that's always better. And so it just makes everybody's life easier. You're in the trucking business, you're not in the cash advance business. So if we can not do that, we're all for it. It also improves the morale of the truck drivers because they just got an $80 a week raise. That'd improve almost anybody's attitude. And again, you're showing them that we're going to do whatever we can to help make your life better. One of the ways we're going to do it is by helping you pay less tax. I've not met a lot of trucking drivers that want to pay more tax. So they're always happy to try and beat the government at something. Downsides to per diem. The drivers that were deducting per diem on their 1040s can't do that anymore. Well, they really can't do that anyway, so that's not much of one. I don't even think that's an issue anymore. One of the other things is any work comp claims, any workers' compensation insurance claims are generally going to be paid at the net of the per diem amount. And so instead of the $1,000 and change, it's going to be instead of the $1,050, it's going to be paid out at $720 a week because the $330 is considered reimbursed expense. I don't think that's really an issue for any trucking company, but it's something to be aware of. And then, yeah, you need to properly transmit it to your payroll department or to your payroll service, but that's for another day. There are some times when you don't want to pay per diem. Financially, there's no time that you don't want to pay it, but you don't want to lose a driver over it. And so some drivers don't want to messing with their Social Security. And it is true because they're paying less FICA tax, their Social Security payout will be smaller. Without going into all of the math of how they do the average of the 35 years adjusted for inflation and all that. If they took that per diem savings and put it away, they're way better off. The government is not a great investment tool. I think everybody agrees. Social Security is necessary, but let's not Let's put as little in as we have to. But some drivers, there's no point in winning that fight with a driver and having them be mad and quit. So if a driver says they don't want it because they want to increase their Social Security input, fine, we won't pay it to you. That's okay. Another situation, we've run into this a few times, is where the driver is trying to get a car loan or a mortgage and their W-2 is smaller because the taxable amount on line box one is smaller. Typically, what we've been able to do to help overcome that is we can write a letter. We'll do this for our clients. So we'll write a letter explaining what per diem is and how it works. And then the loan officer gives it to the underwriter, and usually that takes care of it. If it's that close that the driver can't get the loan, then maybe the bank's trying to figure out a way to tell them no and just blaming it on you. But if the driver doesn't want per diem, then you don't pay him per diem. That's fine. But yeah, the main thing is never lose a driver over this. Even though, yeah, you're going to save all that money every week, I'd rather keep the driver, especially a good driver. They're hard enough to find as it is. So don't ever lose that fight, or don't ever lose the driver to win the fight, I guess is what I'm trying to say. This is the part I really wanted to talk about, is optimizing per diem. Per diem is Latin for per day. So the IRS revenue procedure that I cited earlier talks about that you can pay it by the mile or you can pay it however you want, but you can't exceed $66 a day. If you're paying it per mile or you're paying it percentage of wage, there's a chance that you're paying in excess of $66, especially if you're aggressive with it. In those cases, what you're really doing is since you're paying more, the IRS will tell the driver ultimately if you got caught that that's wage and it's not deducted. You get into all kinds of IRS problems and it's just not worth messing with. Now, I'll tell you that the IRS getting wise to you on this is not the highest priority that they have in all the things that they do, but it's just, there's no point in getting caught on something silly. The other side of it is if you're not aggressive enough, if you're only paying 3 cents a mile for per diem is how you're doing it. You're saying we pay 39 cents a mile for line haul and 3 cents a mile for per diem. Well, you're selling yourself short. And all these advantages that we talked about earlier in the webinar, you're not going to be able to take full advantage of those because you're paying $15 a day at 500 miles a day, 3 cents a mile for per diem, when you could be paying $66 a day. So you're only getting not even a quarter of the advantage for both you and the driver. So let's try and max that out. And the same thing with percentage. If you were paying 10% a wage or paying 50% a wage, the correct number is actually in the middle, and it's going to vary week to week. So that's why we really recommend paying per diem per day to maximize the advantage. Some of the objections that we hear to that is our software won't let us, so we have to pay it as a separate mileage rate that's non-taxable, or our PEO doesn't understand it or won't do it. That's too much money to be messing around with this. Again, I don't know how many trucks each of you have, of course, but we were talking about 57 grand and almost 58,000 for 25 trucks. It's going to buy some new software, or we'll figure out a workaround for it, which is probably the better way to go, cheaper way to go. And the same thing with the PEO. If the PEO won't do your per diem, then you got to find another way, whether you get a new PEO or you get out of PEOs altogether, which is really a discussion for another day. But I mean, it's really important that you pay as much of this as you can, but don't pay too much. Another thing too, just as an aside for paying per diem, you can't pay a driver 365 days of per diem in a year. There have actually been court cases on this where a driver asserted that they were in the truck all year and never went home. The IRS decided that the truck was their home, and so really they got no per diem because they were home every day. So be careful with that. A rule of thumb that I like to tell people, and this is not scientific, is 6 days a week over the course of the year. So that's what, 312 days. You just want to be able to back up what you're doing and say, look, he did get home, 2 days every 2 weeks or a day every week or however you do it. Or we sent him out for a month and then he's home for a week. However, again, whatever's best for your trucking company. But yeah, you really don't want to let other obstacles get in the way of taking the maximum amount of per diem, but not taking more than that. It's just not worth it. And don't let external things like software or other situations get in your way. Okay, that's the end of the presentation. We're going to look for questions, but while you guys are typing in questions, my contact information is right there. You can email anytime or give us a call. We have some trucking payroll tips that are free to anybody who wants them. We don't make you register or give us your email address or any of that stuff at truckingpayroll.com/tips. We have a 1-minute trucking tip that we put out every week. We've been doing this for about 3 months, and so those are all there. You can also find those things on our LinkedIn page or our Facebook page that are linked below. We also have a YouTube page, but you'll get to most of that through truckingpayroll.com/tips. This webinar will be there as well. We're also happy to send all of you the slides from this so you can show it to other people. And if you go to any of those 3 websites, you'll be able to get to the truckingpayroll.com/tips is the best one. You'll be able to see the webinars all right there. In addition to the other webinars that we've done driver recruiting webinars, driver retention webinars, things like that, just to try and help. The trucking people pay us and we want to pay it back, and we want to help trucking companies be successful because it's hard. We all know it. So with that, we're going to see here if there's any questions. Brandon, do we have any questions?
I am not seeing any as of right now.
Okay, I think I see one, but my screen cut some of it off, and so I'm trying to get to it. I'm going to read as much of this as I can, and whoever it is, we'll get back to you because it'll show up in my notes later. Can I have my system set up that the first $66 of pay is considered per diem on qualified drivers, or do I need to have and this is where I apologize, I can't see the rest of it. I think what you're saying is the first $66 of pay every day is considered per diem, and the rest would be considered wage. I think that's the question you're asking. Again, I apologize for not being able to read the whole question. Yes, that's the question. Outstanding. Thank you for putting that in there. Yeah, that's the way we recommend it. In the slides, that's what we were suggesting was that I'm going to try and go back some slides here. That's basically essentially what we're suggesting. Sorry that I'm scrolling back here because we're going to look at the driver side here. Right here, where you take that $330, that's the first $66 of every day. We just aggregate it for the week. And that's something that we do for our clients automatically. For example, for this person, you would just tell us that they had either you tell us 1050 gross or you tell us 2,500 miles at 42 cents a mile, and then tell us they were gone for 5 days, and then we'll do all the rest of this. So yeah, you can absolutely do that, and that's the best practice. I'm glad that you brought that up because I probably wasn't clear about that. It is absolutely the best way to go. Maximize that per diem, and you can, again, you be a hero to your drivers, and that's outstanding. Are there any other questions for anybody? Sorry, I gotta get my screen to open up better here. Let's see here. I was told a driver could receive 3/4 of the full rate if they started and ended at their domicile location. The basis of the basis is, I don't know why it doesn't show me the whole question in there. I apologize for that. I'm going to get back to you on the rest of this question because I can't read it in my screen. So I apologize for that. And then someone just said, I am late. Can I watch later? No worries. What we're going to do is we're going to send you all the slides, and we're also going to put this online at our website. You can go to truckingpayroll.com/tips, which is also will be listed in the slides. And yeah, you can absolutely watch it later. And if you have any questions, you can reach out to us. We're happy to help. We want to help trucking companies. Okay, here's another
Hey,
one. Oh, sorry, Brandy, go ahead.
well, I just kind of had just a general topic question with regards to per diem, and other softwares not being able to, do per diem correctly. Do we show anything that actually can break down the per diem for the driver and also for the company?
Yeah, if I understand what you're asking, we list it all right out on the pay stub for them, where we can show them exactly, here was your rate times your miles, and then here's the per diem. We take it out before we do taxes, and then we do all the taxes and we give it back to them. Similar to the slide that I was showing you, except in a more compact format because we don't have a full page just to explain per diem on every pay stub. But yeah, absolutely, we'll show them what we're doing and we'll show them how it saves them money. Something else that we'll do if you're trying to convince a driver that per diem is a good idea, we can give you a demo check. Like we'll basically show them that slide for the driver side. Let's see here. Let's move up a couple of slides. We'll show them this in a pay stub format and say, which check do you want? Do you want $916 or do you want $831? We'll use your numbers so that we know that we're not, if you're not paying 42 cents a mile, we don't want to be giving that away for you. It looks like we have time for one more question. Uh, we have done per diem for years on a percentage split. Is that okay? I assume the percentage split you mean is you say 25% of the wage is per diem. Not, well, I'm going to answer it both ways. That's the first way. And yes, you can do it, but you're losing out. And that was one of the slides that we've got here is that if paying $66 a day is the maximum and the ideal amount both that you can pay. So if you're doing percentage and that percentage comes out to less than $66, you're leaving money on the table for the company and for the driver. And so there's advantage you could be getting that you're not getting. If that percentage works out to be more than $66, now you're out of compliance with the IRS. And then there's a whole workaround you can do. You basically have to turn it back into taxable wage. It's not worth the work. So the other part of the other half of the question could have been, the percentage split could have been, we pay our driver percentage of revenue instead of rate miles, instead of 42 cents a mile or something. In that case, gross pay is gross pay, in case there is anybody else that does that, even if that wasn't your question. You can still absolutely do that and then take per diem out of there, just like we're talking about with the $66 a day. So that 1,050 could be they got 25% of 4,200 as an easy math example. Okay, I'm going to take one quick peek. We try to get everybody out of here on time. It's important to me that we do that. I thought, okay, someone else asked a question. We'll try this one. I thought it used to be out 100 miles from their terminal. Is that still correct? Generally speaking, these are the ones I get in trouble with. Generally speaking, you're probably okay. If you're out west, 100 miles, you're still in the same meals and incidental market. I mean, Nebraska, you go 100 miles out from Omaha, you're still, for that first 100 miles out to the second 100 miles out, you can, if your truck's aligned right, I think you can take your hand off the steering wheel. But if you're out east, 100 miles is Philadelphia to Baltimore to Washington, D.C. Those are three very different markets. And so the rule of law on the IRS here is multiple meals and incidental markets and gone for a number of days. My concern would be with 100 miles, if your driver started the morning at their home terminal, went to the other terminal 100 miles away, and then came back that night, they might not be gone enough days. That would be my concern. But again, feel free to reach out to us and we can talk about the details. With that, it's 12 o'clock. Brandon, anything else before we wish everybody well?
No, not that I can think of. I'd like to thank everyone for attending today's webinar. I really hope you found value in it. And as Mike mentioned earlier, if you have any topics that you'd also like to see, please put those in the comment sections as well. We'd love to get new ideas on topics that we can cover for you.
All right. Well, thank you everyone for attending also. We'd love to help you with any of these kind of things, help your trucking company be better. So with that, we're going to end the webinar and have a great rest of your day.
Thank you.